Welcome to this video today, and we'll be looking at how to trade Forex successfully and how to become a confident and profitable trader from home. And as you can probably gather from the intro screen, we're going to be looking at the turtle experiment, which is one of the most interesting experiments done in trading history. It's also very motivational for new traders in particular, because it shows that Forex trading is a totally learnt skill. Yet we know that the majority of Forex traders lose. Now, in terms of the actual strategy that turtles used in the markets, I'm going to discuss that in a little bit more detail in a moment, but it was obviously very, very simple. They learnt it in just 2 weeks. In fact, in the second turtle experiment that Dennis conducted, he did it in 1 week. So a very simple strategy, but we know the majority of traders lose money. So why did they lose money? Well, basically, what we've got to focus on, first of all, is cognitive biases. We are actually programmed in terms of our minds not to win at Forex trading. We come in with certain biases, and if we don't understand what the biases are, and if we can't overcome them, which most traders can't, then we're going to lose money. However, the good news is the biases can all be overcome. Now, what I want to do first of all is just go through the main cognitive biases that cause most traders to lose money. I'm just going to do a little summary. It'll take about a minute and a half. Then I'll come back, discuss them in a little bit more detail. Also the turtle trading strategy and how to put a simple trading strategy in place that can help you make money as well. So here are the biases first of all, and then I'll be back in a moment to discuss. Welcome back after that summary there of cognitive biases and why they cause the majority of traders to lose money. You can see why perfectly there, because we're so obsessed generally when we come in the Forex markets with not losing. The biases kick into play, which cause us to run losses and on the other side snatch profits in case they get away. Obviously ego is involved. Also, I think, most traders have a problem with outcome bias. When they get a trade wrong, they question the decision that they made. It doesn't matter if you get a trade wrong. As long as you're trading with an edge, it's just a probability-based market. Any trade can go wrong, but your edge will work for you longer term. Now, in terms of anchoring, I think, most traders want to get the perfect entry. Very often get a breakout, let's say, price has moved aggressively the probability is that breakout is going to continue. Yet many traders will just sit there and think, yeah, I'll wait for the pullback and get in at a better price, which is the wrong thing to do. Now, in terms of winning the majority of your trades, it doesn't matter at all in terms of achieving Forex trading success. It's just not important. Yet, if I look around online, I see lots of people buying strategies that claim to have 90% or more in terms of winning trades. Now, the track records are made up normally. If you look at professional traders are not normally winning on the majority of their trades. The turtles only won on 30% of their trades, and 95% of their profits actually came from just 5% of their trades. So they had a lot of losers, but their winners were big and obviously ensured they were profitable over the longer run. Now, in terms of those biases we've just discussed, you'll only ever overcome them if you've got a strategy with an edge which you believe in, i.e. it's going to win long term in the markets. You're going to have to endure those periods of drawdown that all traders do, where you just keep losing, okay? For long periods of time, you've got to trade with discipline, keep your losses small, wait for your edge to kick in, and then you'll be returned to profits. Now, in terms of the turtle trading strategy, it was pretty simple, really. It's just a simple breakout strategy, one of the techniques, by a 40-day high. Then basically the stop was dictated by the volatility of the market, and the percentage was then basically allocated to the stop. Now, it sounds incredibly simple. Dennis proved to them that if they did that over a long enough period of time, the system would make money, okay? So basically, he gave them the evidence of it working. And I think in terms of if you're going to win at Forex trading, you've got to understand why your edge is going to work long term. You are going to have those periods of drawdown. Now, in terms of the turtles, Dennis ingrained a mindset into them. And what I'm going to do now is just show you a little summary of what Curtis Faith said about the turtle mindset. He was the most successful of the turtles, and the beliefs that were ingrained in them that allowed them to make money longer term. So I'm just going to show you the turtle mindset summary. Then we'll be back again, talk about the strategy in a bit more detail and how to build your own strategy for profits. I'll go back off that summary there of the turtle mindset. Now, in terms of what they were taught to trade with positive expectation, i.e. they always believed that their edge would work for them longer term, which meant they could be consistent. A lot of traders, when things are not going their way in the markets, will deviate from their strategy rules. Well, if you do that, you don't have a strategy. If you've got positive expectation your strategy is going to work, you're going to stick to it, okay? Obviously, money management was very important in the turtle trading strategy because they lost so many of their trades. So the actual bet size was very, very small. And in terms of trading in the markets, it was not about prediction at all. Just focus on the probabilities, just basically trade in the present. Too many traders are obsessed with prediction. Also, in terms of the mindset, notice the quote at the end there from Bill Eckhart, which obviously Richard Dennis's partner. The comfortable thing is not the right thing to do. Most traders do comfortable things in the market, and if you consider, let's say, a little bit of a loss, it's the comfortable thing to do to let it run a little bit more, isn't it? Or if you've got a small profit, best take the profit in. It feels comfortable. If you get a big breakout, high volatility, it's comfortable not to take the trade. It's comfortable to wait for a better entry on a pullback. Of course, that, as we said earlier, doesn't occur. So in terms of most traders, they want to do comfortable things in the market. Trading should be a relatively uncomfortable experience. Taking a lot of losses on the trot or in sequence is very uncomfortable for most traders. It wasn't for the turtles, because they knew they were going to win. Now, in terms of the strategy itself, it was based on breakouts. I've actually done a link under this video so you can read all the turtle rules. Do they work today? They will not be as effective today as they were back in 1983 when the experiment was first devised, simply because market volatility is less than it was then, although they will work actually in terms of you trade the rules on enough markets. Now, obviously in terms of breakout strategy, it is a very simple strategy to understand. And I think there is one breakout setup which a beginner can base a strategy on, and it's very easy to understand. Basically, you have a very tight trading range, i.e. the market is moving sideways, then suddenly you have a big increase in volatility and a break from the range. If you go with the breakout, after it's come from low volatility to high, you will find that will put the odds in your favour longer term. A lot of massive moves come from breaks from tight ranges. No one really understands the reasons for it if you look in the news. I mean, basically, the supply and demand situation has changed. That's reflected in the chart. When the breakout comes, high possibility of a big trend developing. That's just one example. I think in terms of developing your own strategy, what you need to do is basically understand why it's going to work longer term and back test it, and just basically have full confidence in it so you can trade with positive expectation. Now, in terms of the turtles, a simple strategy, it worked very, very well. And simple strategies have always worked well. I mean, many of the traders who were on the turtle experiment are still trading today, and very successfully. Now, obviously, the markets change over time, probably less volatility we did then, but a simple strategy will always work. You don't want to be complicated in Forex trading. Don't be trying to predict the market, looking for some secret hidden code. There isn't one. Just trade probabilities and you can be a winner. Now, I think in terms of the turtle experiment, it is motivational, I think, because it just proves anyone can win if they really want to, if they get a strategy they believe in and they can overcome their biases. Now, overcoming the cognitive biases we mentioned earlier is a choice, okay? Any trader can make the choice to overcome those biases and trade with a simple strategy with an edge and make money. Now, that is the video for today, but what I'm going to do now is I'm going to finish up with 20 of my favourite quotes from Richard Dennis and Bill Eckhart. Obviously, a lot of them relate to the turtle experiment. A lot of them also are general advice on making money in the market. So here are the 20 quotes. Hope you enjoyed today's video. Take care and have a good day.